Welcome, everyone. Um, Welcome, everyone, and thank you so much for joining us on today's Mentorship Monday session. We have the privilege of having Thandekile with us today, and she's a financial planner by profession. For those of you that haven't met me, my name is Jayshree Naidu, and we're going to be speaking to Thandekile today about cash flow. And I heard once at a conference, Thandekile, that cash is king. And very, very often in business, in terms of the struggles that we find businesses going through, it's all around cash flow and finances and financial management and wealth management. So anything to do with finance is something our businesses definitely need a lot more of. So I'm going to hand over to you, and you're going to take us through this exciting and scary, scary topic. I know finance is something that also scares the hell out of me from a business perspective, but I would like you to share as much as you can on this topic. As always, everyone, if you would like to ask Thandekile a very specific question that she is not covering, please put it into the chat, and we're going to be directing those questions to you in a little bit as well. For those of you that are watching on YouTube a little later and not live in the session, welcome to the session with Thandekile. And Thandekile, over to you.
Thank you so much. Good afternoon, ladies and gentlemen. I don't know if there's any gentlemen, but I think it's
There's
predominant.
definitely gentlemen.
Is it? Okay,
This is
I'll take it
open
as
to
there.
our alumni and to anyone that's watching on YouTube as well.
Okay. Yes, good afternoon. I hope everyone is doing well. I hope you guys had a productive day. And that you guys are excited to have this conversation where we're going to be speaking about cash flow. Um, So, as Jayshree has stated, I am a financial planner by profession, and I deal with a lot of businesses in terms of structuring their finances in terms of the business. And one of the conversations that generally crop up is that when they see the financials of the business, what they usually do is that they look at it just from a compliance and regulation perspective, and they don't necessarily see the power and the instrument that is financial statements. And I think specifically today, what I would love to do is speak about the power of cash flow. And this is what we're going to be discussing today. So, as you can see, this was just a slide deck for you guys to just, look at and start thinking about and get the juices flowing in terms of the strategic guide to planning, forecasting, and growing financially. But I wanted us to now start speaking about what are the different types of financial statements or components of in the financial statements that you'll get. And predominantly what you'll find is the income statement, the balance sheet, and the cash flow statement. In most instances, for many business owners, the one that we look at and we put a lot of emphasis in is in the income statement, right? You want to see that your business is generating a profit. We find that to be very important to us because we want to see whether this business is doing bad or, I mean, good or bad. So we put a lot of emphasis to it. But I've realized that there's not necessarily an emphasis that we're putting towards the cash flow statement. But the tool that is a cash flow statement, I kid you not, it is entirely beneficial, right? It's important for us to, one, in its entirety, understand the power of financial statements. But it's also important for us to understand from a cash flow perspective, how exactly can we use it and how can we use the interpretation of our cash flow statement to our benefit, right? Because it is, in essence, a great tool. It's a great tool, one, for business decision making. The decisions that you make in the business, it's a great way to understand what is happening in the business. But it's also a great tool, one, because a lot of people that are looking into your business are looking at your cash flow statement. So whether this is investing in your business, whether these are financiers in your business, whether it is financial analysts that are looking into your business, they basically want to look at your cash flow statements because it has a lot of information, and particularly in terms of how you manage and run your business in its effect. So let's go into what a cash flow statement is. When we speak about a cash flow statement, we're speaking about cash flow, which is the move of money inside the business and outside of the business. Like Jayshree stated, in most instances, we refer to cash as king, right? We are saying that cash is king, and we want to make sure that you do have the money readily available in your business. So this includes when you receive money in the business, how much cash do you have on hand? And we also refer to the outflow of money, how much money is actually moving out of the business. So how much actual cash is moving out of the business. So when we speak about the net cash flow, this is us saying, what is the money coming into the business, less minusing the money in terms of cash that is moving out of the business. And that speaks to the cash flow or the net cash flow of the business. It's important for us to have a healthy cash flow. By and large, when we look at our finances, it's important for us to have a healthy cash flow. And I'm going to tell you why. In many instances, people that have businesses, we usually look at profitability, right? And we'll find ourselves in a situation where a profitable business can actually run out of cash, which can be quite odd, or it feels like it could be an odd scenario, but it happens in most instances where business is profitable. And when you look at the income statement, the business looks like it's profitable. But when we think about the cash flow in terms of having money on hand, in actual fact, the business does not have enough cash flow readily available in the business. And that becomes a problem, right? Because there's certain things that allow your business to flourish. There's certain things that allow your business to be able to be operational. And one of the biggest things is to have the money, the liquidity on hand in terms of money readily available so your business can actually function. So I'm sure you've realized, guys, even if you're waiting for a big order to come in or a big client to pay off, if you don't have money in the business to pay for your operational expenses, that could be an impediment towards your business. That could mean that the going concern of your business and even trying to get more business or trying to get more products or even trying to provide more services, it could be hard for you to be able to do such, right? Because you don't have enough money on hand. So we want to make sure that you are able to pay your obligations on time. We want to make sure that you're able to make sure that your business is running efficiently so. And that's only possible if you make sure that you have a strategy within your cash flow management strategy to make sure that you know when your money is coming in, you know how much money is coming out, and you're able to manage that adequately so that you always have liquidity in the business and you never find yourself in a point where the business has a financial shortage. Now, a lot of businesses go through this. A lot of businesses go through an environment where they don't necessarily have enough money and cash on hand within the business. And that has a lot of implications. I know a lot of you guys are starting out your business. All right. And you guys are starting out your business, and some of you guys are already generating a revenue, and some of you guys are still in the process of it. One of the things that I would genuinely say is of importance is for you to be able to track your data. Start logging the numbers. So if you have the numbers in terms of how much money is coming in, so all the transactions about the people that are paying you, that are giving you money, that are putting money into the business, you need to know about that, all that money. And you also need to know about all the money that's going out of the business. So it's important for you to be recording all the numbers. And I know it may seem a little bit tedious, but I will tell you this, there's a lot of information that comes out of this information. There's a lot of from logging this data in itself. There's a lot of information that comes out of that information. And like I stated, it's information that you could use for big decisions that you want to make in the business, but also in terms of how your business is perceived, right? And there's different ways of tracking your cash flow in the business. You could use accounting software and you could also use spreadsheets. So it's entirely up to you which one you want to use. But I usually say for businesses that are starting out, businesses that have not necessarily are not necessarily making a lot of money as of yet, it's good to use a spreadsheet, and there's many spreadsheets readily available. And if you do want me to pass on to Jayshree and Brandon a spreadsheet that I think would be of benefit, I would gladly do so, where you could actually use these cash flows to your benefit. All right. So it's very important for you to understand, are you going to be using an accounting software or are you going to be using a spreadsheet? Okay. Then it's important for you to then actually review your cash flow on a weekly or a monthly basis. Now, this is solely dependent on the frequency of transactions that happen within your business. So if you are getting a lot of volumes in terms of transactions in your business, then it's really good for you to review your cash flow on a weekly basis. Or if your business is not necessarily having a lot of transactions within the month, perhaps maybe they're larger in terms of what the type of transaction is, then you can do your cash flow on a monthly basis, right? Then it's important for you to categorize your cash flow. So categorize the type of things that are coming into your business. So whether it's the inflow of money or the outflow of money, it's important for you to actually categorize it. So you need to categorize it in terms of, is the cash flow transaction that I'm referring to operational? Is it investing where someone is injecting money into your business, or is it financing where someone lent money into the business? It's important for you to categorize what is the actual money coming into the business and what is the type of money coming out of the business. And this is going to allow you to have a full picture in terms of what exactly is happening into the business, what's happening with the business rather. The other thing that is of high importance, right, is for you to also understand in the business, and perhaps maybe let me break it down. We've already stipulated that in your business, the whole reason why we want to do cash flow management is because we want to know what money is coming into the business and what money is coming out of the business. And the whole reason why we want to do that is because we want to make sure that the business is liquid at every single point of the business operations. Now, by virtue of you doing your cash flow management and you doing it way in advance, you're going to be able to check whether you're able to pay your financing, your investors, and also the operational expenses of the business in itself. Now, by virtue of you creating this cash flow management strategy, you're going to be able to see, do you have enough money readily available to pay for your obligations and your expenses? Okay, so if you have a low cash flow threshold, this is going to be of utmost importance to you to say, hang on, I don't have enough money in my business. I need to start thinking about where I'm going to get that money. How can I strategize in terms of reducing the amount of expenses I have in the business? It starts becoming a tool. And if you see as time goes by that, hang on, I'm going to have a deficit, this is where you can start making good decisions in your business so that you can still have business continuity. Apologies. That word is a tongue twister for me. So that you're able to still operate and still have operational capability within your business in itself as well, right? So as you're doing your cash flow management and as you start doing it for a longer period of time, you'll start seeing that you can now create a threshold in your business to say, for my business, in cash value, in terms of my net cash amount, I should never have this less than this amount of money within my business in terms of cash. Because if I don't have more than this amount of money, that means that I'm not going to be able to carry out the operational activities of my business. So it's very important for us to do that, and precisely for us to be able to reduce the prospects of us having a shortfall going forward. Okay. So I wanted to speak about something that I think is of high importance. One of the biggest things that you're going to make in your business life, or one of the biggest decisions you're going to make, is that you're probably going to want to expand your business, and you want to make sure that your business has prospects of expanding, and you're going to probably need to start looking at the various availability, or what's readily available in terms of strategies that are available for you to start expanding your business. In most instances, for business owners, it would be people investing into the business, or it would be for you to lend money from people, borrow money rather, borrow money from people. Okay. So when you go to someone and you say, listen, I want to be able to borrow a certain amount of money, there's going to be a whole host of things that they're going to ask of you. But one that is going to be extremely important is the information that they receive from your cash flow statement. And the reason that's why that's the case is because the cash flow statement really speaks a lot about how exactly are you running your business. It gives a lot of information in terms of the efficiency of running your business. Are you thinking about cash reserves? So, do you have money on the side as a safety net? Do you understand whether your business may have a cyclical season in terms of the revenue generating? Are you also in an environment where you're able to collect your money in time in terms of people that owe you money? So if you're in a business where you have accounts receivables, which is when generally your business is owed money for a service or a product that is provided, right? Are you able to recoup that money or bring that money into that business, into your business efficiently so? Because one of the reasons why a lot of businesses usually don't have liquidity or they have shortfalls in their businesses is because they're not able to bring the money into the business as quickly as possible to pay for the operational activities of the business, right? So if someone owes you money and they say they would pay you in 60 or 90 days, you need to start thinking, is that enough time for me to pay for my operational activities? If not, what am I going to do so that I still have the business continuity that will make sure that my business is able to stay afloat? All right, because that becomes of utmost importance. As I stated, a strong receivables collection practice is really, really, really important because that is going to allow you to make sure that your business is staying afloat. But it is also going to give the borrowers, people that are giving you money, the lenders, it's going to give them surety that you know how to bring money into the business. And by virtue of you being able to bring money into the business, you're going to be able to service your debt on time. And that means that you're not a risk or a high risk as other businesses that are not able to manage their cash flow and show that they're able to manage the money within their business appropriately so. Okay. It's very important, like I stated, that you're tracking your cash flow statements. And in tracking your cash flow statements, you need to do it in a very methodical nature. It needs to be clear. It needs to be a strategic use of funds. You need to show how you're strategically using your funds. You need to show that you're methodical in how you're using your money. And that needs to actually be relatable in what you're showing on paper. All right. It can't just be in your mind. I know that as a lot of business owners and entrepreneurs, we have everything in our minds. We know all the people you need to pay. We know all the amount that is owed to us and that is due to us. And we do the maths in our mind, right? We can estimate all these numbers. But unfortunately, what is in our mind, they can't extract, right? So that's why they need to see it on paper and they need to see it as a track record so that they're able to show, or you're able to show transparently so, what exactly is happening in the business. One of the other things that is of utmost importance is that you need to be able to forecast for your business. Now, forecasting for your business will allow you to say, this is what I am anticipating in my business. And in terms of revenue that is coming into the business, and in terms of the expenses that are coming out of the business as well. Okay, so by virtue of you forecasting all of this information, it will allow you to see the patterns in terms of what's happening in your business. Is the revenue that you're generating in your business cyclical? Is it seasonal? Or is it just consistent in nature? So that gives you a little bit more information. It can also tell you and give you more information in terms of how should you be handling your expenses, right? Are you a bit too bloated in terms of the expenditure that you have in your business? Should you start cutting down in your expenses because your projections of revenue that is coming into the business may not necessarily be that much in comparison to the expenses that you have in your business. And that could have implications in terms of the liquidity that you require in your business and what you require in terms of business continuity and the operational activity in the business as well. Okay. And as I stated, your financial records need to be transparent and they need to be extremely, extremely clear. So we've already spoke about, what we think lenders would generally need, lenders and investors, anyone that wants to inject money in your business. We already know what they pretty much want in terms of what they want to see from cash flow statements. We've also spoken in terms of generally how do cash flow statements work. But now we need to start thinking about the optimization of your cash flow statements. Now, for people that already have cash flow statements in place, there's certain things I think that you need to make sure that your cash flow statement is encompassing. The first one is, one, you need to have a forecast that is at least 6 months ahead. And this is where, like I stated, you're forecasting your income coming into the business and the expenses coming out of the business, and estimatedly what is the net cash flow of the business in itself for at least a 6 months period, so that you can plan ahead if there's any shortfalls that you're going to be experiencing and if you would be reaching that cash threshold that we referred to as well. Okay. The other thing that you want to start thinking about is your actuals. You need to start logging that data. And I've mentioned it, that as you're making the forecast within the business for at least a 6 months period, for every month that you have achieved or you've gone past, you're logging the data of the actual expenses and the actual income coming into the business. What that is going to do is that it's going to allow you to compare what you forecasted for the business and what you want to actually happen into the business and what the reality is in terms of what's happening in the business. What is the actual figures in terms of what's happening in the business as it stands? And what that does is that it will allow you to make a comparison. So for instance, if there's a difference in terms of how much you forecasted to be coming into the business and how much is actually coming into the business, what exactly is the problem? Is the problem that the business is not generating enough income, or is it that the business is not able to collect or bring the money that is obligated and that is due into the business on time? And this is where we speak about optimizing and accelerating your receivables in the business. Now, if someone owes you money in the business, it's really good for you to start thinking, how exactly can I make sure that they pay me on time or even quicker? Right? So that you're able to have money on hand in the business, so you are able to pay for your operational expenses. And one of the easiest tools that is used to make sure that people pay you on time and you're able to get your accounts receivables back or to you on time is to ask for a deposit before you even do the business. So many businesses say, listen, before I do any business or any activity for you, or before I provide you with a product, can I please have 50% upfront? What that does is that it brings liquidity within your business. So even though they still owe you this 50% that they haven't paid you, this other 50% is the liquidity that you've provided within the business as well. Another methodology that will allow you to bring money into your business a little bit quicker is to provide for an early payment discount, right? May not have to be a big amount. I just know generally people love discounts. So even if you said it's 1%, it's better than zero. And generally, people love having a discount of some nature that would be beneficial to them. Another way of optimizing your net cash flow, because as we need to remember, we always want to make sure that we have money readily available. And after we've paid for all our expenses, we still have money readily available. So the question is, how do we go about that? One, make sure that you're bringing money into the business efficiently so and as quickly as possible. The second one is to delay your payables. So delay how quickly you have to pay the people that you owe. So whether this is from debt and people that are financing your business, or whether this is from people that are providing you with inventory, start strategically thinking about what mechanisms can I use to make sure, or to really ask that I pay people a little bit later, so that whilst I'm waiting for the money to come into the business, I can delay when I'm actually due to be paying money out of the business. And that's going to help with your cash flow management. So one of the ways is to actually negotiate a longer payment term, right? To say, listen, can I pay 3 months from now? Is that a prospect? And I even would give you a higher premium than what I initially thought I would be paying you. That's a methodology that could be used. Or you could say, can I pay you in phases, right? So that you don't have to pay them the large sum of money all at once. Perhaps maybe you can ask them, can I pay you in a tiered perspective, where I'll pay you 20% now, and this is just an example. I'll pay you 20% now, 50% later, and then the other 30% at the end of the term. So what that does is that it spreads the amount of money that you need to pay, which means that it will bring more cash into your system, that will allow for the liquidity that you require in your business as well. I've also spoken about eliminating unnecessary expenses. It's very important at the beginning of your business journey. You need to be very frugal once. Try to be as frugal as you can. I do understand that obviously the business needs to be operational, and there's things that you need to spend on to allow your business to be operational. But you also need to start thinking, do I really need something? And if you don't necessarily need it, or you don't need it in that specific period, perhaps you can delay it, right? Doesn't mean that you have to let go of it in its entirety, but you can delay it so that you don't have to perhaps pay for a specific thing right now. Okay. The other thing in your business, and that will help tremendously in optimizing your cash flow, you need to have cash reserves. So every time you bring money into the business and money is flowing out of the business, there's a net cash flow that is readily available. Of that net cash flow, some of that money needs to be put away as cash reserves. And when we speak of cash reserves, this is that money that we refer to as the buffer, that money that will help you in those cyclical seasons when the business is not generating enough revenue, or if something is happening in the business and you're not generating enough revenue and you still have operational expenses. This money is going to allow you to be able to fulfill your obligations whilst you're still making sure that you try bring in business into the business, you try bring in business and money into the business in itself. Okay, so it's important for us to do that, to make sure that we have cash reserves. And I do recommend that we at least have at least 3 to 6 months of expenses readily available in terms of your cash reserves, right? It's money that you have to have in the business in itself. I'm going high level into these things, but I really think that they are going to be of benefit to you guys. But yeah, we're going into it high level. The other thing is in terms of how you use your cash flow planner. So there's fundamentals that are important in terms of how to optimize and use your cash flow planner. The first one is that we want to make sure that you have an opening balance, right? Which is generally how much cash do you have on hand, right? And then we want to speak about the forecasted amount. And I've spoken about that. What is the forecasted income coming into the business? And what is the forecasted expenses coming out of the business? Now, you want to be able to pre-plan your forecasted amounts at least 6 months ahead, right? But you could do it on a monthly or a weekly basis. This is entirely dependent on the activity of the business. Then you want to know what is the actual income and expenses. And I've already spoken about that and why we need that. And I'll just emphasize the reason why is because we want to be able to make a comparison between our forecasted amounts and what we're trying to achieve, inclusive of what our actual amounts is, and why is there a difference between the two, and how we can change that. Okay. It's important as we're doing our cash flow and we're doing it within our cash flow planner that we're able to start strategizing for what if scenarios. So I call them what if scenarios. So you need to create what if scenarios that say, I've created a forecast for myself and my business. Great. Now, if my business does better than my forecast, that's absolutely great. But what do I do with all this money that's readily available? Do I put money into my cash reserves? Do I put money so that I'm able to pay my debts off quicker? Do I make sure that that money is used for the expansion of the business? You can now strategically start looking at what exactly do I do with this money? And that's where we start speaking about the decision making in the business and why cash flow is such a powerful tool for decision making in the business. The other what if scenario that we need to create is that from the forecast that we have, what if you meet the expected forecast? What does that mean for your business? And what does that mean for the decision making within your business as well? And then we need to do the what if case scenario for the worst case scenario. If your business, in terms of what you forecasted, is not doing as good as what you forecasted in your in terms of the business, in terms of the actuals that's happening in your business, then what do you do in that case scenario? Where do you get the money for the operational activities in your business? How do you ramp up the amount of money that you're making in the business in terms of selling your products or providing your service, whatever the case might be? What exactly do you start doing so that you're able to create the liquidity in your business? I think this is of utmost importance. And this can only be done if you have a cash flow planner, right? And if you're actually tracking your cash flow planner. And from that, you're able to make really, really crucial decisions in your business. Crucial decisions that are going to allow you to start thinking ahead. And not everything feels like it doesn't feel like it's just popping up, and it's impromptu. You can strategically start thinking about where would your challenges be? Where would your strong points be? Where are some of your weaknesses in the business and how can you optimize them? How exactly can you start maneuvering in your business as well? Okay. I hope this helps. I hope this answers some of your questions. I don't know if we do have any questions.
Hey, Thandekile. So we definitely have some questions. I'm just going to, if you can stop your share, we're going to go to those that are online with us. You've just frozen there a little bit,
Hi,
Thandekile. There
sorry.
you go. No problem.
Sorry, I lost. Yes, apologies. Mhm. Sorry, were you asking a question?
I was saying that we definitely have some questions on the line. I'm just
Okay.
going to direct some of those questions now to the ladies, some of the ladies and gentlemen on the line. So there was a very good one from Anastasia that came in a little bit earlier. And Anastasia says, where do we get a cash flow system? How do we start if we do not have one? So what's the starting point?
Absolutely. So a cash flow system, one, and as I stipulated, is that you could use a software planner, right? That would allow you to create a cash flow statement. Or you could use just a normal Excel spreadsheet, right? A normal Excel spreadsheet. And what an Excel spreadsheet should have is that it will allow you to forecast what you anticipate in terms of what's coming in and out of the business and what the actual amounts are in terms of what's coming in and out of the business as well. I would recommend if you're starting out, go for the Excel spreadsheet because it's affordable. In most instances, Jayshree, if you do have a mechanism to pass on an Excel spreadsheet that I usually give to smaller business owners, I'm happy to send that to you, and then you can provide it to everyone that's on the meeting right now. I'm happy to do so.
Thank you so much, Thandekile. I have actually indicated on the chat that with your permission, we can share that with everyone that's attended today's session, and we can make it available as a resource on our website at a later stage as well. So we're going to move on to some of the other comments and questions. Thandekile, I'm not sure if you also have sight of the chat. But Malatola says she's recently restructured her business specifically for sustainable revenue and profitability. So the session was a great reminder. So thank you, Malatola, for that affirmation. Anastasia, I see you put a few comments in the chat. Do you want to unmute and let's hear from you as well? Was the session as scary for you as it was for me, Anastasia?
Good afternoon, everybody. I hope you can hear me. Just came to sit at a place where there's warm coffee and Wi-Fi. So if there's a little bit of noise, please excuse it. Jeshri, I was waiting for this mentorship Mondays, especially for this cash flow story, because as Thandekile was speaking, so I just want to put you in a scenario where I have been recently, I think last year or so. So I print for SPAR, the distribution center, and they print about 300 GRS books, depending on the business of the DC, about 3 or 4 times a year. And so I was forecasting this year that, okay, based on the usage and the past experience, this is going to happen. So we'll print this book about 3 or 4 times for the year. So what I can do is then get the paper from the paper suppliers, work on a discount for the customer, and then keep the price the same for the next 2 to 3 print runs, which was helping me keep the business, making the customer happy, because if paper prices happen, then we keep the price the same. Lo and behold, the guy I was dealing with was fired. There came a new manager in, and he then started getting other quotes from other suppliers. Thank God, touch wood, mine was still the best, and they're still printing with me. But the forecasting was like, I forecasted this for the year, and this is what happened. So I didn't know how to do that forecasting. And I know more sales equals more income. And so in terms of the cash flow story, you sit there and 12,000 Rand is going to come in, but then it doesn't come in. So it messes up this whole cash flow story that you were waiting on. And unfortunately, in my business, in my field of business, is only when a customer orders, that's when I know I get the money. It's not that everybody's going to need t-shirts next month, So how do you do that? How do you work with that type of cash flow story?
Absolutely. So one of the things that I'm happy to tell you, Anastasia, is because you've got a track red kit, right? It's great for you to use the information of the forecasted information that you have and the actual data that you have to start seeing what are the patterns that you see. In terms of people buying t-shirts, people requiring t-shirts, do they need them closer to the summer and spring season? Or is there a certain event that happens in your area where people want to create t-shirts? Or I know, for example, people, there's an unveiling season in terms of, unveiling of tombstones, and people like having t-shirts in that specific season, right? So you need to start seeing what is the cyclical patterns that's happening in the business. Now, you can only do that when you have the data to say, specifically for t-shirts, I can see the pattern in terms of when I sell the most t-shirts, when I don't sell the most t-shirts. In terms of printing for SPAR, this is what the consistencies look like. In your case scenario as well, the first one that I wanted to say is that while I understand that you wanted to get ahead of the curve and get the paper on time, but that is creating a risk for your business. And I must be quite honest, because if you don't create that business or SPAR decides to go with someone else, you'll be left with this paper that you've gotten. And now you don't have the liquidity and the cash in the business for other things that you may want to use it for, such as marketing, because now you no longer need this paper now. Perhaps maybe you need to start putting more of your emphasis on marketing your business. But now you've put all your assets, which is cash in terms of your business, in this paper that you've acquired, thinking that you're getting ahead of the curve. And I hear you in its entirety. You thought you were getting ahead of the curve, but it creates a risk for your business in itself. The only point it would be beneficial is if they gave you a deposit of some sort to say that, okay, this money that I'm spending is actually correlated to the business. I'm not taking it from somewhere else. It's correlated to SPAR. I'm not taking it from somewhere else where I've generated money. No, it's for this specific line of business that I'm generating. Okay. The other thing that I wanted to mention and now I've forgotten. Jeez.
Don't forget,
And it's
it's
all
very
okay.
urgent.
the what if scenarios are going to be very important. And this is where I refer to, you need to know if your business based on your forecast, and that's why it's good to preempt. If your business is doing better than what you forecasted, great. Start building a cash reserve. Start thinking about expansion. Start thinking about getting ahead of the curve, like you stated, right? This is if your business is doing
Yeah.
better than anticipated. But if your business
Yeah.
is just doing just what you forecasted, what does that mean for you and your business, right? What exactly can you
Yeah.
do? What are the business decisions that you can make that would be fruitful for yourself and the business in itself? But the other one is, what happens if the worst case scenario happens where perhaps, for example, SPA takes away from you, right? What does
Yeah.
that mean for your business? What does it mean in terms of the business continuity? And that's what is required of us as business owners, to start thinking ahead. If this happened to me, what would I do?
Yeah.
Because we sometimes speak about revenue risk. And when we speak about revenue risk, it's about, if you have a client that is giving you 60% of your income, or even 50% of your business, of the business and income of the business, that's a risk, right? And you need to start thinking and thinking ahead of the risk in itself, to say, if they had to pull out, what do I do?
Yeah. Yeah.
Okay. I hope that helps,
Yeah.
Anastasia.
It really does. Thank you so much. And because of what happened with SPA, because I've been printing for them for 20 years and it's been just coming in. And when this guy stepped in and they threatened to take the work away, that's one of the questions that I started asking. And so I'm lucky to say I'm now doing, I did North Rand, now I'm doing South Rand as well. So yeah,
Oh, that's
marketing and
great.
sales.
That's great.
Thank you so much for that answer.
Thank you. Thank you, Anastasia.
Thank you so much, Anastasia. I mean, that was a lovely question. And I think, it resonates with so many other businesses that are on the line as well. So Nirasha has a lovely question for you as well, Thandekile. Nirasha, I love hearing your voice. So let's unmute, and you're welcome to direct your questions to Thandekile.
Thank you, Jayashree. I like hearing your voice too. Thank you so much, Thandekile. You've touched on so many important things, and I remember, when I was starting my business, if I had the advice that you just gave, I would have I would have had more of a supply of cash flow. So really good advice for SMEs. My advice is, what do you do? What's your best advice that you can give for investing extra cash flow?
Okay, perfect. So in regards to this, the biggest thing that you want to do is look out for liquidity. So whatever you invest in, it needs to be something that is it's going to provide liquidity. So the investment that you go in, you should be able to get money out of it as quickly as you can, right? So that you're able to pay for your operational expenses or whatever activities that you require it for. The other thing is, don't go for investments that are too risky in nature. What you really want to do for a cash reserve is just to beat inflation, right? That's the biggest thing that you want to do. And the reason why we want to beat inflation is that we want to keep the purchasing power of the money in itself, right? We all know that 10 rands 10 years ago is not the same as 10 rands now. 10 rands right now feels like less. So we want to make sure that if inflation is not eroding this cash reserve that you have. So we want to make sure, yes, that we're making a return, but that return is just making sure that our money is not eroded by inflation. But we also don't want to create risk for this investment, that even though it was there for cash reserves, there's prospects of this money us creating a loss, or this money reducing in value because we put it into a risky investment. I hope that helps, Narasha.
Yeah, thank you. Thank you so much.
Sorry, it's unfortunate I can't go into the specifics of which service providers, the specific products. I would have to speak to someone on their individual capacity to see
No,
exactly what they require.
I totally get it. Thank you so much.
Thank you so much, Nirosha, for that question. And I think you've answered this question, Thandekile, that we have from Londiwe in the chat is, she said, is it a good idea to have a longer credit term because you will have to pay higher credit rate, which will impact your bottom line? I think you did talk about this, but if you just want to touch on this point that Londiwe's made in the chat as well.
Look, I do recommend having a higher credit term if you can see that you're going to have liquidity challenges in your business, right? If you feel like you're not going to have enough money coming into the business to be able to pay for your operational activities in the business, and one of the biggest line items of money flowing out of the business is the credit that you're paying, right? That prospectively could be an environment where you may want to have a longer credit term. What it does is that, yes, you're paying more for it, but what it also means is that the business is able to pay for the operational activities of the business without having this bloating of this amount that you owe.
Thank you so much for that, Landiwe. If we can just get a thumbs up if that question was answered, and if you would like to refine that, you're welcome to ask again. But I find this fascinating, Thandekile, because we have a lot of organizations pitch for the different programs that we run, and they have to do these pitch decks. And I always struggle to understand how is it that some businesses can actually be profitable, but they run out of cash? So, can you talk me through that? Because it's quite interesting, right? Where businesses can show this on the different statements, because a cash flow statement is not something we've ever had to work on. We work on the income statements, the normal financial statements that companies, organizations require when they want to provide us with funding. But can you talk me through that?
Absolutely. So, a business, when we look at profitability, we could also speak about money that is owed to us, right? But we don't have it in cash form, right? It is an obligation of a business paying us. It's also the environment of a business paying us, or someone owing us money, paying us in 3 or 6 months' time, but it doesn't allow us to actually carry out the operational activities of the business. So, profit is about someone owing you money and you're entitled to that money at any point in time, versus when we speak about a cash perspective is, do you have it on hand? Now, some businesses can say, listen, I see that I owe you, but I'm going to pay you in 90 days time. The question now happens is that, what are you still going to do in this 90 days in terms of operational expenses? Because they're still there and there's still people that you need to pay. And that's where the business now has liquidity problems. But when we look at it from an income statement perspective, you're still owed money, which means that you need to put it in the income statement. But what is showed in the income statement is not a direct reflection of what you have in cash. So the profitability that you see in your income statement is great, but it's not in actual cash terms of what the business is holding in cash rand value or whatever currency value.
That makes sense. I just want to see from those attending this call live in today's session and not watching the YouTube recording, are there any questions from the floor? If I can have a show of hands, and then we'll direct the question to you. And while you're thinking about your question, or if you'd like to raise your hand, Thandekile, maybe you can tell us as well, what's the most, sorry, I forgot I didn't have my camera on. So what's the most common mistakes that you see small businesses making when it comes to their cash flow? I know you touched on some of the tips that they can use, but what are some of the most common mistakes that they make?
Absolutely. It's one, the bloating of the expense line item. So in terms of all the things that are outflowing of the business, there's generally a lot of things that we generally take out of the business, right? That doesn't correlate in terms of how quickly money's coming into the business. That's usually the problem, where they're not able to correlate the two together to say, I know I've got money coming in. Yes, it's going to come in, but when is it going to come in? right? That's the first thing at hand. The other one is actually people not doing a cash flow management strategy. A lot of businesses are not logging their data. They're just doing it top of mind to say, okay, hang on, I know I've got X coming in, I've got these expenses to pay, and they do it top of mind. Versus when you write it down and you can see it in forecasted and actual and in a spreadsheet and in a software, you can see the patterns in terms of what's happening in the business in itself. The other one is, and I think this is a direct correlation between what happens in the business and the cash flow, is the combination of personal finances with that of the business. I've seen a lot of business owners say, listen, I'm just going to spend money in the business to take care of my personal stuff, not knowing that in a cash flow perspective, you're taking out of the business, right? And if we log that data, that is going to give us information that is material and that is not effective for our benefit. So it becomes highly important to make a distinction between one, your personal activity, and that of the business as well.
Thank you so much. That makes perfect sense, Thandekile, as always. We have a hands up from Kabelo. Kabelo, please feel free to unmute and ask your question.
Good afternoon, everyone. Thank you for taking my question. I do have a problem that you've mentioned in the beginning, where my business is making profit. It's when accountants look at it, they see a growing company. But at the end of the day, I do not have the everyday cash flow that allows me to do other things on the side. And how can I fix this? Because my company is mainly based on a subscription model, and I find myself having to chase like a 3 months outstanding invoice, or something like that. Or for instance, the project that I'm embarking on right now, it requires me to at least run with this project for the next 3 months without any income coming in my way. So I'd just be setting up that environment for the client. And once that environment has started running, it's only then I can start making money out of that client. So how can you advise me to start having like a healthy cash flow within the company?
I would say this as well, Cabello, is that, like I stated, that, the cash flow allows you to make extremely good business decisions, right? And sometimes it's important to factor in the runway of the business activity or whatever you need to, or project management or whatever you need to do for the client. You need to factor in the runway, how long it's going to take, how many months it's going to take to actually achieve the goal that you required or the scope of service that you need to achieve for the client, and how to quantify that in rand value so that you're able to say, client X, this is how much I require from you, right? Because this is what it's going to take of me. The other thing that is important is that, especially when you're starting out, you need to start thinking about, how do I phase in the revenue that they need to give me? So even when I start pitching work to clients, how can I say that, listen, I need this money to be provided to me in a phased tiers, right? So that you're also able to pay for your operational expenses. I feel sometimes as small businesses, we are afraid to put out to say, listen, I'm happy to have this contract, but I need to have a tiered effect in terms of the revenue that you're providing me. That's going to allow you to have a going concern in your business. Because what generally happens is that when they have to now pay you a huge lump sum, you're now going to have to go pillar to post. And that's what happens with a lot of business owners, where they do all the work, they take on all the financial constraints that it took to actually run this operation or run this project that you were in. And when it's time for them to pay you, they don't pay you. And maybe you've gone into debt to actually bring this thing alive in terms of this business, this project that you're putting into effect. And that has implications. I would say in some way or another, in your pitch deck, in how you propose your business, you need to start thinking about saying, for every deliverable in terms in certain clusters, I need to be paid for that, so that you also see the commitment of the service or the person that you're doing business with, to see that, are they really going to pay me? Are they really understanding that this is crucial for my business as well? Okay. That really is top of mind for me when I'm thinking about it. I'm just trying to think if there's something else that I'm leaving out, but I think that's really the top things that I would say you really need to start implementing it and being disciplined in the business of it. And just as a side note a bit, I do know as businesses, we're afraid of losing business so much that we don't create governance in our business. In terms of, this is the rule of thumb in terms of how I carry out business with other businesses, in terms of what I do, right? Because we're scared that we're going to lose out on business, but you need to find a synergy of, yes, looking lucrative and attractive, but also creating governance in your business so that you don't find yourself in liquidity matters or illiquidity matters.
Thank you so much, Thandekile. So we will have to take that conversation offline, maybe, Kabelo, when we do share Thandekile's contact details with all of you after the session. So if you do need to reach out and engage with her in a private capacity, you're welcome to do that. There's a question as well from any advice on how entrepreneurs, so Brandon's asking this question, how entrepreneurs can pay themselves when the business doesn't make consistent income.
Absolutely. And that's why I usually say, if you have a positive net cash flow, that's when you pay yourself. I think that's the simplest way for me to say it. So if you look at your income, see, when you look at your general cash flow, right? So it's your income less your outflow of money, which is money coming out of your business. Now, if you have a positive net cash flow, that means that you still have money left over after you've paid for all the expenses in the business. Okay. Of that money that's left over, you need to start thinking, and especially when it's a small business, this is where I pay myself. This is where I put cash reserves for the business. This is where I start thinking or putting money away for the expansion of my business as well. Those are the three top criterias of what you're going to do with the residual money that is left over. One, pay yourself. Two, build a cash reserve. And the third part is the money that you're going to have, that you're going to put away, and over time it will accumulate. And this is where you're going to start thinking about the expansion of the business. Whether the expansion of the business is hiring more people, buying a certain resource or asset like a plant or a manufacturing tool, or whatever the case might be, that's where you start thinking about it. Or if you need to start thinking about, this is how I'm marketing my business to get more business, you do it from that investment that I'm referring to. So you pay yourself from the net cash flow, in essence.
Thank you. And that's why very often entrepreneurs don't pay themselves, and we have to have this hustle mentality. I know I earn far less now that I'm running my business, but then we're reinvesting a lot more back into the business from a growth perspective. And that's the failing I think a lot of businesses have, is not having this growth mindset when it comes to the business and actually reinvesting cash that comes in. Because entrepreneurs, when they sign a contract, that money is there for you to deliver on the project. It's there to help grow your business so that you can actually service other contracts that's coming in. And this is always the mistake we make. So, Nirasha, I know we are running out of time, but I'm going to allow Malatola. I see your question. I know Thandekile won't refer a particular business platform because we can't do that on these sessions. So we will, go back to some of the modules we've delivered where we've covered quite a few systems, but she won't recommend a specific system. But I want to end with Nirasha's question. It says, we all want to grow and have multiple streams of income. How can growth hurt my cash flow, and how do I manage the risk?
Sorry, can you just repeat that?
So we all want to grow and have multiple streams of income. How can growth hurt my cash flow, and how do I manage the risk?
Absolutely. Love that question. Growth can hurt your business when you're growing at the incorrect time. It's growing when the business cannot take on the burden of your business growing. So when it comes to growth, what we always need to remember is that two things get affected: the amount of money outflowing of the business, and secondly, your balance sheet of the business in terms of the liabilities that you have in the business. So those are the two things that usually get implicated by growth, right? Before you actually see the benefits of growth in itself. So if you start growing the business when the revenue is not consistent, when you don't know the patterns of revenue, and you don't know how to achieve a positive net cash flow, that becomes a problem. Because, for example, if you decide to grow your business, when your business is already not creating a positive net cash flow, and you decide to hire someone, that's already going to topple your cash flow in a negative direction. But in your perception, you thought you were growing your business. If you decide to buy a plant on loan, and now in your outflow, you've got another expense line item of paying off this debt, and you're already not in a positive net cash flow, that is also going to put you in a shortfall that is going to make the business not grow the way you wanted, right? But in your perception, you thought that you were growing your business. So it's very important that, even though we want to grow the business, there's certain things in your checklist that you must have ticked off. You must have ticked off having a cash reserve. You must have ticked off that you've consistently had a positive net cash flow in the business. You must have ticked off that you have a clear, methodical governance and structure in terms of how you receive money in the business, how you take out money in the business, how you're paying yourself, how you're paying other people, what are the systems that are in place. So once you do that and you start seeing that you're doing it effortlessly so, and there's more money in the business, now you've got a cash reserve. Now you've also put money away for the growth and expansion of the business. Then growth is optimal. You can do it without any hesitance.
Wow, I have taken so much from this session. Thank you so much, Thandekile. It's been absolutely awesome having you online today. I'm sure the individuals that have dialed in have also managed to take away so much wealth, from the session, and helping you grow your business. And I think, Nirasha, you said it earlier as well. I wish I had this when I just started thinking about owning a business, over a decade ago. And now that we are in a phase of growing our business, this type of advice is so critical. So I'm hoping that everyone that's online and those that are watching on YouTube have taken away some key nuggets from Thandekile. I hope you implement some of these learnings into your business as well. And we will be sharing those recordings with those templates and supporting documents with those that have attended the session. And if you're not live online, please send us a message on info@yidi.co.za and request a copy of that template, and we'll send it through to you as well. And while I have yours attention, I'd just like to welcome our newest team member, Kanyesile. Welcome, Kanyesile. You're welcome to switch on your camera and say hello to everyone. It's your first session with us, and Thandekile, you'll be happy to know we have managed to grow to an extent where we can bring on another resource. So, Kanyesile, we'd love everyone to just see you. Let me just remove the spotlight. Hi, Kanyesile. You can give us a wave.
Hello, everyone. I'm super excited to be a part of the team, and I look forward to working with everyone.
Thank you so much, Kanyesile. And thank you, Thandekile. We will be in touch soon. And I'm sure lots of the businesses are going to be requesting to get in touch with you personally to get more hands-on support to take their business to the next level. So with that, I'd like to close off today's Mentorship Monday. Apologies, we're running 5 minutes late, but we will definitely see you at the next session, which will only be on the 23rd of June, because the 16th of June, we celebrate Youth Month and everything that comes with it. Bye, Thandekile, and have a lovely, lovely afternoon. Bye.
Thank you very much. Bye.